everyone, welcome back to Ask the Broker. I'm Bailey, and today we're answering a huge question. How can you start investing with little money? If you think you need thousands of dollars to invest, think again. Jon Sanchez, CEO of Sanchez Gaunt Capital Management, a very experienced broker, is back to break it all down. Jon and Dad, welcome back.
Thank you, Bailey and daughter. Great to be back with you.
Awesome. Well, let's start with the first question. Do you actually need a lot of money to start investing?
Actually, you don't. We're in a great time period, Bailey, where the old days when I got started in this business, yeah, you needed thousands and thousands of dollars. But over the last few years, a lot of the different investment companies say, you know what, you can get in for whatever, $10, $5, $20, whatever you want to do. A lot of times it's dependent upon what you want to invest in, but literally for a few bucks, 20 bucks, let's just call it, you can actually get a portfolio started.
Okay, well, I've heard that you can start that by investing in fractional shares. Can you explain what fractional shares are to us?
Yeah, this is one of the great things that have changed in our industry. The old days, you'd have to buy a full share of a stock. So let's say a stock, your favorite company is trading at $100, right? You need $100 to buy that. Not anymore. You can buy the fractional of that. So let's say it's $100 stock and you got 10 bucks to invest. So you would own 1/10 of a share of that stock that's trading at $100. And then hopefully with your next purchase, you put in another $10 and now you own, 20% of the share price, et cetera. And again, one thing that's incredible nowadays is most in the industry do not charge any commissions when you buy or sell a stock. So again, you're getting in for really no cost to you whatsoever from a commission standpoint.
Well, that seems like a fantastic option then if you're starting with a little bit amount of money. What is the best thing to start investing in?
It depends upon obviously a lot of criteria: a person's age, how long till they need the money, what is the purpose of the money, all these different things. But for younger people, which is kind of who we're directing this to, I like to start with individual stocks, right? You don't have really any internal expenses like you do on some what we call package products like mutual funds and ETFs. And it's really fun, right? For the first time, when you own one share of stock, Bailey, you actually are an owner of a company. People don't realize that. Remember when you were a little kid, we bought you a share of Disney stock and we went to Disneyland. I said, Bailey, you actually are an owner of this company. I remember you looking up at me. But it's the truth. When you own one share of stock, you are the owner of a company. So I always like to tell young investors, invest into something you understand, right? If you're a big fan in gaming, take a look at a stock that's involved in gaming, whether it's the semiconductor side or the software side. If you like to eat, take a look at some of the beverage companies and snack companies. The list goes on. And that's what really makes investing fun, which is really the most important thing when we are a young investor. We want to have fun. We want to be interested in the companies we invest in instead of some crazy name you never heard of that you have no interest in.
Sounds like everyone could be interested in it then if you can be investing in any industry that you choose. So if someone has something in mind that they'd like to start investing in, what is your first step for someone who's never invested before?
So the first step is to open an account with one of the online brokerage firms, right? I can't give you any names, but there's tons of them that are out there. Make sure they don't have any fees associated with the buying and the selling of the stock. And then, like I said, just have fun. Pick something that you know, that you understand, and just start buying, one share today, one share next week, one share the next. And before you know it, Bailey, especially if someone is young, before you know it, you got an entire portfolio. And so what I always like to tell young people also is, buy 10 shares. Make it a goal to buy, start with one and then get 10 shares. Once you're done with that company, start with another one, buy one share or work your way up to 10. And before you know it, you really only need about 15 to 20 stocks to really have a good diversified portfolio, assuming they're in different industries and things like that. So before you know it, you can have a portfolio of 100 different shares, or 100 shares of a bunch of different companies. Now you're really diversified. Then as time goes on, you make more money, you can put more money in. You just start building on those. So you start with one, go to 10, 10 turns into 20, et cetera, et cetera. And it's so much fun when you're buying individual stocks.
So it seems like if you make it a habit to consciously just be investing in different things,
That's the
then you can
key.
really build up that portfolio. Well, that kind of leads me to my next question for you. If someone can't invest a lot for a while, how can they still grow their money?
Well, there's a great strategy called dollar cost averaging. We in the industry call it DCA, and a big fancy term, but all it means is pretty much what I described earlier, where you're putting in a little bit amount of money, but on a regular, consistent basis. Here's a little piece of advice. I always like to dangle a carrot in front of a new investor. Go online. There's tons of online financial calculators, and you can put in, I'm starting with, let's say, $100, and I'm going to add $25 a week for the next 25 years with a certain rate of return. You'll be amazed at how much, when you and I have done this since you were a little girl, you'll be amazed of how much money you can have when you have time on your side. So Once you know that, you go, okay, I can afford whatever, $25 a week. Put it in. No matter what the stock or the market is doing, just put it in on a regular basis. Sometimes you're going to buy the shares at a higher price than you did last time. Sometimes they're going to be at a lower price. You don't care because, again, you're looking out 20, 25, 30 years until you need this money, for a house or retirement, whatever it may be. And before you know it, if you follow that rule, this DCA or dollar cost average, regular basis, every week, every month, no matter what happens, you'll be amazed at what that money can grow to.
So it sounds like nobody has an excuse anymore to not begin with $10. You can start your journey into investing. Well, thank you for people to understand. So if you found this helpful, hit the like button and subscribe, because in the next episode, we're diving into stocks versus bonds and what the difference is. You won't want to miss it. So we'll see you next time on Ask the Broker.